Morning friends, today is Thursday, July 21st. I'm Marv Eisen of Timeless Dollar, and starting out the day, I'm looking at the S&P E-mini from yesterday's chart, but I want to start looking at the economic calendar for today and call your attention to at 10 a.m. there's going to be a report of the leading economic indicators, and the estimate is down minus 0.6%, and this might have the effect of moving the market at 10 a.m. So I want to call that to your attention. Now, moving over to the morning news today, Dow futures down 71, S&P futures just about flat, NASDAQ futures up. Oil is down to 95, pretty good, 95, but the U.S. Treasury is up over 3%, and we're expecting that to go higher. Moving back over to the S&P, I want to comment today about trading in terms of experience of the individual trader. Most people have their own way of trading. I mean, if you're in a trading room, you are listening to what other people's opinions are, and you might trade based on someone else's opinion. But I tend to think that many traders and most traders trade alone and trade by making up their own mind of what their opinion of prices are at a given moment in order to assess whether or not they should make a trade, and if so, in what direction. Most traders also base their trading on price action. Now, price action in terms of day trading, I'm talking about day trading, not investing, which is of course a longer term. But candlestick patterns are probably the largest part of decision-making process in what makes traders trade, or what incentivizes them to trade. For me, I use trading tools and indicators just like you do. I only use one indicator, stochastics. A relatively fast stochastic down here, okay? So that's my only indicator. Stochastic is the only indicator that has some kind of semblance of a forward-looking indicator, so I only use that. Now, I use that, of course, in conjunction with price action to confirm price action. I tend to use the indicator, and I'm going to point out right over here, there's a candle with a shadow to the downside and an oversold stochastic, and so that would give an indication to me that market might be reversing here and moving to the opposite direction being to the upside. Now, even before that, I start the day, generally I don't like to trade in the first few minutes of the market, because the market tends to vacillate up and down in the first few minutes to half hour of the market, sometimes longer even, until the market makes up its mind as to the true direction that it wants to go in. And one of the things that I always do is put some markings on my chart to indicate where the market might have targets for that day. And for those of you who have not seen my previous videos, the market does have targets. The market knows where it wants to go. It's not as haphazard as most people think. So I put my target levels on the chart. Now, my obvious targets are the previous day's close, which I put with a horizontal line, wherever the previous day's close was. And then I put my trading zone on the chart, which gives me three other pieces of information. Now, the trading zone is based on measurements of the market, how far the market rises from the low to the high, how far the market falls from the high to the low, and this is averaged out over the previous several days. And there are 12 calculations that go into it. It looks pretty simple, but it's not. And these are target areas that I put on my chart, and this gives me three additional pieces of information. One of those pieces is the range that prices are likely to trade in for that day, the range. The other target is the calculated resistance for the day and the calculated support for the day. So we have four pieces of information on this chart. We have my trading zone, which is three pieces of information. We have the previous day's close, okay? And we have, of course, where prices are at any given point in time. So we have those pieces of information, and now how do I use this when I trade? Well, first thing, as I said, I don't like to trade at the very early part of the market, because that's typically when stop runs are executed. Now, stop run, for instance, here's one right at the beginning of the market. Here's one at 9:30. There are 5 points between each horizontal line on this chart, just to give you a frame of reference. You see this red candle here? This red candle? Well, traders who jumped onto this red candle thinking that the market was going to head down, because of course it goes down. Let's see, this candle has a length of, from high to low, 9 points to this red candle. And then quickly followed by a green candle of the same magnitude and opposite direction. So this was a stop run. So this was meant to fake people out and take money away from the early unsuspecting traders. So I like to trade based on targets. I don't like to trade based on seat of the pants, based on moment-to-moment price action. So here, the market is backing off, and then there's a relatively long shadow here corresponding to an oversold stochastic. This was a pretty good indication that the market is going to retrace to this previous day's close, which of course it did. Second thing that I like to do is look at where prices are going. Now, if I'm going over here, if I'm making my trade over here based on, well, this is a target, what's going to happen after the target is hit? I could jump off over here because, that would be a scalp, but holding on here, or else just getting off and waiting, watching the market continue upward and then upward and then upward. And I see my next target is at my calculated resistance level up here at 39.70. So, well, maybe, this is a target. The market wants to go to targets. It does go to targets. And look, you see this line here, 39.70. This is a calculation. It's nothing. It's a calculation. And it's a calculation, but it's an educated calculation. It's a calculation with mathematics behind it. So what happened? The market hits the target, stops, and then vacillates around that target for the rest of the morning. Why does the market do that? Because it very often does. That's why I use a trading zone, and that's why I recommend that you do as well. How do you get a trading zone? 2 ways. You can, well, the trading zone, first of all, is based on Taylor's trading technique, okay? So you can buy Taylor's trading technique on Amazon. It's not an easy book to read, and the calculations, you're going to find it are difficult to do. The easier way to do it is if you want to take my course at timelessdollar.com. I show you how to calculate it. And an even easier way is if you subscribe to my daily trading zone service. I send you the numbers every day, or I send it to you the evening before so that you can set your chart up for the next day. How else do I trade? Well, as I said, I trade based on price action, based on candlesticks, same as you guys do. And one of the trades, and I only use 6 trades, GST, TMC. Gap, support and resistance, trend, time and price, momentum, and candlesticks, okay? So here is a time and price trade, okay? Over here, market goes down a certain number of points, consolidates, and goes down by the same number of points in the same amount of time. This was a time and price trade here, okay? And it stopped at where? At a target, okay? And then after that, I don't know where it's going to go. The stochastics is in no man's land, so I can hold off. The market reaches this level. Is it going to go back there? I don't know. But I do know that the market very frequently revisits the targets. The market doesn't hit the targets every day, but very frequently and very often it does. And so that's how I trade. I wait in the morning. I observe price action confirmed by my stochastics, and I look for the market targets in addition to the 6 trade setups that I just told you about. So that's my long-winded video for today. Thanks so much for taking the time to watch. I really do appreciate it. If you liked this video, hit the like button. I appreciate that too. trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar.